Hello class, welcome to part 2 video for your chapter 6. So in the previous video we have discussed two solutions. First is using trading account, second is using margin and markup concept to identify the missing information. So here we learn the third solution, which is using control account to identify the missing information. A control account is a summary account in general ledger to summarize the total value or transaction of subsidiary account, such as individual receivables and payables account. There are two types of control account. First is receivable or payables account. So receivables, another name called sales control. Payable is purchase control account. And here we have a sample. So basically on the debit side is the transaction that will increase your receivable value. On the credit side is the transaction that will reduce your receivable value. On the other hand, for your payables account, on the debit side, those entries will reduce your payables balances, and on the credit side, those entries will increase the payable balances. So let's try one exercise for our receivables and payable control account. Classroom exercise 6.10. The following are the information of TCP Limited during the financial year 31st December 2020. So we are giving some information. So based on the above information, we are required to prepare the control account for receivables and payables in order to identify total sales and purchase during the financial year. So let's draw two ledger. One is receivables, one is payables, and we follow the sequence in our in our table to fill out the information. First one, trade receivables at the 1st of January 2012 is a debit 63,200. So we write balance BD here. Next, trade payables is a credit 58,800. Next, collect from customer. This is your collection. Collection from customer is 567,300. Collection will reduce your receivable balances. Amount is 567,300. Next is payment to supplier 489,500. Payment to your supplier will reduce the amounts that you owing to them. 489,500. Next, return invoice. Return invoice is customer return to us, so it will reduce our outstanding amount. So return invoice is recorded on the credit side of your receivables account, 37320. Next one, return outwards. Return outward is the goods that we return to our supplier, 5890, and this will reduce the value that we owing to them. Next, discount received. We receive discount from our supplier. Discount received will also reduce the amount that we owing to them, our supplier, 7120. Next one, discount allowed. Discount allowed is the discount that we give to our customer, so we have to record in our receivable control account. And discount allowed will reduce the amount that they're owing to us, so we record on the credit side. Next, delivery charges to customer. So sometimes we deliver the product to our customer and we will charge them the delivery fee. So 11230, this amount will increase. This transaction will increase the amount that customer owing to us. So we record on the debit side of your receivable account. Next, purchase overcharged by your supplier. So if your supplier overcharging to you, you have to do what? You have to minus it, right? So the 1360 is the amount that you have to reduce because the supplier has overcharged you, so you have to reduce it. So reduce on the debit side. Next, dishonor check from customer. What is the meaning of dishonor check? Let's say your customer give you payment, and this payment is by check. However, when you bank in the check to your company bank account, but the customer bank balances is not enough to clear this check, so bank will call you and say that this check cannot be clear. It means that effectively you did not receive any amount from your customer. So if you have a dishonor check, the treatment is you will add back this amount because the customer still owing to you. The amount of dishonor check 12780. Next, check returned by supplier. So this can be you issue check to your supplier, but your bank balance is not enough to clear the payment, or you write some wrong information in your check, so this check has been returned from your supplier. So if you have a check return situation by your supplier, this will increase the outstanding amount that you're owing to them. 9710. Next one, contract with supplier and customer. In some situation, your customer will be your supplier as well. So if you have trade receivable with them and you have a trade payable with them, one of the solution is we no need to have two payment. Let's say you pay him first and he pay you later. We can do something called contract. Contract is a net of balances between your supplier and customer. So contract will result in lower payable and lower receivables. So we look at the receivable first. For contract, we record on the credit side 2,800, and for your payable control account, we write on the debit side 2,800 because the contract will reduce your receivable and payable at the same time. Next, so it say that your trade receivables at 1st of January 2021, debit balances is 67,400, credit balances is 4,150. And for your trade payables, it has a debit 3,720 and a credit 59,290. So we have to include this information first before we can find out what is the total sales and total purchase. So we start from the receivable first. So receivables balance BD for the next financial period 67,500, and balance BD on the credit is 4,150. So we know the brought down and the credit down amount will be on the different area, right? So the brought down here, we write balance CD here. This is the double entry. If the brought down is on the debit, the carry down will be on the credit. So same to here, if the brought down is on the credit, the carry down will on the debit side. So we also record our payables and purchase account. So for the payables, the brought down on the debit is 3,720, and the brought down for the credit is 59,290. So we look at the breakdown on the debit side. If the breakdown is on the debit, the carried out will be on the credit side. Similar to this, if the breakdown is on the credit, the carried down will be on the debit. So by record this, we have complete all the information in the table, and the missing amount will be our sales and purchase. So now we have to sum out the total on your debit and credit to find out the missing amount. So the credit of my receivable account is 646140. My total debit is 91360. It means that the different amount will be 646140 minus 91360. So 554780. This is my total sales. And for the payable, the total sum of my debit is 565960. My total sum of the credit is 72230. So let's find out the balancing amount. 493730. So by recording this, I can tally my payables control account. So this exercise is how we can use the receivables and payable control account to find out the missing information, such as your sales and purchase. And that's all for part 2 video. So in the next session, I will explain internal control with you. So if you have any question in your receivables control and payables control account, you can leave me a message in LMS or send me by email or through the comment in WhatsApp, in YouTube channel. So that's all for this part 2. I will see you in part 3 video later. Thanks for watching.